emergence of China's DeepSeek AI model has brought up big questions about the enormous amount of money being allocated to AI. Joining us now is Jennifer Nason. She is JPMorgan's Global Chairman of Investment Banking. Joins us here on set, and it's always great to have you. Welcome back.
Great to be here. Thank you for having me.
So I am going to start there because you run investment banking at JPMorgan. You have a particularly expert purview on the tech sector, and one of the conversations we've had on the show in the past couple of years is how much money is going toward AI investments and how companies are gaming this out. So when you hear about the innovation of DeepSeek, what does that do to change the narrative, if anything?
So I'm not sure yet, but I will say it felt like DeepSeek got thrown on the table this morning and nobody had ever heard of them before, whereas there's been a conversation, certainly in the Valley and amongst the tech industry, about DeepSeek for a while. So I do think it's a name that just suddenly got into the zeitgeist today, and we'll actually have to do a little bit of work, I think, to figure out what this all means. But I personally think moments like this, where we see step function changes in how AI is evolving, is ultimately good for all of us. And certainly if we can make it cheaper, that's going to accelerate innovation. But I wouldn't go thinking that NVIDIA is somehow no longer relevant to this story. So I think everybody needs to take a breath.
Does AI still continue to fuel the deal-making pipeline here, or is that expanding out, especially with the Trump administration now?
Yeah, no, I think it's core to everything we're going to be doing in technology going forward. And I've heard comments today about things like we're hitting data walls, or suddenly this is all getting commoditized. I think that is not likely the case. There's so much innovation going on at the data level, at the algorithm level, and at the hardware level with chips. So I'm not even sure we're at the first inning. We may be just picking up the bat and getting ready to swing. So I think there's a lot of positioning for a lot of companies, and it's not clear where the money's going to be made ultimately. What is this pie going to look like, and who's going to get what slice, I think is still to be determined. And I've been around long enough where rollout of the internet, rollout of mobile, it wasn't clear early on where the money was going to be made, but we know now how the pie got shared.
Well, speaking of, Jennifer, maybe you can help me out with perspective on this. You entered, I believe, JPMorgan's TMT business about 25 years ago, just as the dot-com wave was cresting, but also something else happening was the rise of open source. And open source shifted where the value was in the enterprise ecosystem pretty dramatically. How much potential do you see for something similar to happen here with DeepSeek in AI? How's that going to affect the way things are valued?
Yeah, so Chinese open source, I think, may be in its own category, but the debate around open source versus closed systems has been around as long as we've had software. And I can give you arguments on both sides of that equation. I think if you're Microsoft or you're Google and you're investing billions and billions of dollars in building out the infrastructure, I think open source might be a little scary here, but it's clearly the best way to foster innovation and to have transparency in how these models actually work, because there's a lot of value judgments in these models. It's not like a calculator. It's making a lot of value judgments in how it assesses and analyzes data.
We're still near all-time highs now for the S&P, despite today's downdraft. We've been talking a lot about animal spirits. What are you seeing in terms of M&A activity this year with Trump at the helm, in terms of IPO pipeline finally starting to open?
So I'm always optimistic when I come on, Morgan, and I'm as optimistic as I've ever been. 2024 was a great year for deal activity, for IPOs and for M&A. Tech, a little bit behind. We need to see more tech IPOs coming to market, and we're hopeful we'll see that in 2025. But the mood is good. There's euphoria in many places around what the Trump administration might bring. Nervousness around interest rates, clearly a big looming issue. But the mood is good, and we're certainly gearing up for this to be potentially a record-breaking year for investment banking activity generally.
Very quickly, you're getting ready to retire from JPMorgan, 40 years in investment banking. You've seen these types of cycles before, I take it?
I have, and they're exciting, and you have to buckle in, and you have to be prepared for days like we had today. But there's a lot to be optimistic about, particularly in the US and particularly in the US tech sector.